Hi, this is Mark with ValueCharts.com. We're taking a look at soybeans here. We're looking at a continuous price chart. Basically, we've got three different indicators applied to our charting screen. The first indicator is what we call value bars, and this is essentially very similar to value charts, except for it's essentially designed to overlay the color scheme of the 5 primary valuation zones in a value charts price window on top of traditional price bars. So you get, essentially you have one chart that communicates both cost, price in terms of cost, and price in terms of value. So it's a very powerful tool in being able to communicate a lot of information by way of the price, cost history of a market, and also the color of the different valuation zones, so also the value state of a market as well. Well, this is a market that we could be potentially coming up upon a buy signal here. Below the top indicator, by the way, is also in the middle what we call MQ momentum, and on the very bottom here we see that we have what we call cycle finder. So these are several of my favorite indicators that I use to place trades, and we're basically looking for a possible corrective low in the soybeans market, and we would probably look at possibly September or November beans to place trades in. But essentially what we're seeing here is we're seeing a situation where momentum is starting to lessen. We can see that momentum slowing down to the downside. This is being confirmed by MQ momentum as well as being confirmed as well by our cycle finder. We're seeing the selling pressure, if you will, slow down. We're now in significantly undervalued here, so we could jump in and with the expectation that momentum would turn up in relatively short order here, or we could wait for momentum to actually turn up. And using the histogram sometimes is a very helpful indicator to time entries and exits. For example, if we would have timed our short entry when the histogram turned negative up there, we would have gotten in a short position at 1755 and then covered when the histogram turned positive at a price level of 1672. Now, obviously, there's some whipsaw price action that can occur, but in general, if we see fairly active markets moving, experiencing a lot of volatility, a lot of directional movement, then this is it's a very helpful indicator as well. So we'll keep an eye on this market, but right here, with where we are essentially in the night session of July 24th. We're looking at the 8 o'clock price bar on a 60-minute continuous chart. This looks like a potential area, a very attractive area to buy the market right at 1624 here. So we'll follow up on this for those brave enough to pull the trigger and do a little bottom fishing. This could be an attractive place to do this. Now, it's important to remember that this is a weather market. Keep an eye on the weather. If we've got a strong possibility of rains coming in, that can dramatically affect prices, and you don't want to be caught on the wrong side of a weather market. If we have certainty that the market is going to have more of the same, which is drought conditions, then this is a good market to trade in. The other thing I would suggest is that be careful about carrying a position over the weekend. Again, weather surprises can happen all the time on the weekend, and oftentimes it's a gamble. But depending on what happens before the weekend, sometimes if we see enough of a sell-off, for example, if we continue to see a sell-off up until Friday, then Friday could represent a potential low-risk buy area in the market. There again, we're taking a bit of a chance there. But right now, we're essentially on this video looking to enter a long position here, or we can wait until the momentum indicator actually turns green in the histogram and use that possibly as a way of managing our trade. Always use price stops, always manage risk, but this is a very interesting opportunity that potentially could be unfolding in front of us. We'll check back later and see how this turns out. Thanks. Bye.